Hello, welcome to Vibe Trading. My name is Don Okoro. So today being the 8th of May 2020, let's quickly talk about the stock market. As we know that the stock extends its weekly gain despite the unemployment report we receive, and also the non-farm payroll declined by 20 million, and also we can see that the unemployment rate is increasing with about 15%. But from all look of things, it's a temporary problem, as we can see more companies are beginning to open back, and we can see the business condition is beginning to improve a little bit. So let's quickly look at the stock market and just kind of like talk about what happened, because everything that is happening reflect back in the stock market. So if we look at the stock market, the overall market, we can see that the market is in stage 2, and this is that level we talked about from the last video I put out. I talked about this level. This is where the market was having trouble to break, but finally it did break that level today. So that is a very good sign that more buyers are coming into the market, businesses are beginning to open, and people are beginning to invest their money into the market. So now where do we go from here? We're going to try to keep this thing very simple. This is one thing I want you to look. When we broke this level, our next target will be this moving average, and the moving average, that's the 200 moving average. It's at the 300 level, the $300 level. So that is where I am anticipating that this SPY is gonna go to. If it doesn't go to that level, it's gonna pull back, and if it does go to that level, it's gonna find a resistance at that level. So if I'm in a trade like this, that is where I'll be looking to take my profit when we hit that level. So why is this important? We need to understand the stages where we are in the market. As we know, we are in stage 2 right now. We are breaking out and we are trading just above that resistance level, and it now becomes our support level. So now we're just gonna look forward, or we're gonna anticipate that the price movement, we're gonna anticipate it to go to the 300 level. So let's just keep that on our watch list and kind of just follow through and make sure that we understand that we understand where we're putting our money, and we understand what's happening with the overall economy. Okay, well, let's quickly look at a couple of things here. Let me just look at the shorter time frame. Let's just see what happened from the shorter time frame. Let's just look at 5 days. All right, if you look at 5 days right here, you can see where we were trading last the 5 days. The lowest we were was 277.66, and today we went all the way to 293. So this is the thing I want you to understand. Always know where has the market been and where it's gonna go to. The market went to this level, and from this level the market shoot all to this level. We had some pullback, and the next thing we saw, it's making its way back to the 300 level, and that is where I'm anticipating we're gonna find some resistance. Okay, all right, let's look at oil. So this is oil. Let's just look at the bigger picture. Let's look at the yearly chart. Remember I talked about this. I talked about that consolidation. We are in stage 1 right here, and I'm seeing some consolidation here. We just need we need more buyer to come in and try to break this stage 1 and see if we're gonna test the stage 2. So from all look of things, it's just setting up to break that stage 1. It's setting up to break that, to come to the stage 2, and I'm anticipating if it gets to this level, it's gonna break that stage. Okay, and if we look at our 1 minute chart, we can see that the overall it did pretty well today, even though we started off by selling off. you can see that it sold off and it went all the way back. By the end of the day, everything just went up. Okay. All right, let's also move to let's look at bond. Even before opening bond, something you have to understand is whenever the overall market is trending up, the bond tends to go down. Okay, so this is bond. Bond sold off today because the overall market was doing pretty good. So a lot of the time what they do is when they're trading, they kind of use bond to hedge. So if the market is down, the bond is up. If the bond is up, the stock market is down. So when we look at this, we can see that the market just sold off right here. That is what we saw from today. When it opened, we just saw the market just sold off from here. Okay, so the market sold off, and it's as a result of the improvement we are seeing in the market, because we can see that the market is selling back up. So as a result of that, bond is selling off. Okay, because the overall market is making some higher high and higher low. We are moving to the higher level. Okay, so let's look at the yearly chart too and just see what the yearly chart is saying. Okay, the yearly chart, looking at the bond is just below our 20 moving average. It's just below here, has a lot of resistance under here, so it's having trouble to break it. And like I said, from all look of things, I think the market is picking back up. The market is gonna continue that move. Okay, so let's also go ahead and look at let's look at gold. All right, so when we look at gold is just right here. This is where you find that gold find that resistance level at this level, the 163 level, but it's just trading in this channel. This is a channel it's trading in. So this is a channel where it's trading, and it's just hanging in that channel. Haven't really been able to move out of that channel. So at this moment, we just understand that gold is trading in a channel. Sorry, not a channel. It's trading in a range. As you can see, this is the range it's trading in. It hasn't broken that range. So until when we have a break, then it could break in either direction. It could break to the downside or to the upside. But we need to just understand that gold is just trading in a range at this moment. So let's quickly look at our 5 days and see what gold did in the last 5 days. If you can see, it made some pretty good move, but it's not really that interesting, with the kind of move he made. On Thursday we saw it made a very big move to the upside, but come today, Friday, it's selling off. And I anticipate come Monday, that the price will continue to sell back down, because I'm anticipating that the overall market will continue where it left up. We will continue from the move it's made on Friday. Okay, and let's also go ahead and look at TVIS. TVIS, it's the inverse of the SPY. Remember, I said whenever the SPY or the S&P 500 is going higher, the TVIS is gonna go low. So it's what they call the inverse. It's making an inverse movement. Okay, so when we look at it, we can see that it's been selling off from the last 5 days. We can see that it was trading at the 249 level, and we can see that it's selling off, and that sell-off, it's gonna continue come Monday from our look of things. Well, thank you for staying till the end of this analysis. If you enjoyed the analysis, why don't you consider subscribing to the YouTube channel if you haven't subscribed yet, and also go ahead and smash the like button so that we can continue to put more content. And thank you for watching the video, and I hope to catch you in the next one. Bye.